Hey, we are live. Hey everyone, Barry Burns here with TopDogTrading.com. While people are coming on, I'll just invite you to get my free market timing indicator. I use this indicator to enter every trade I take, and I'll give it to you for free. Works on any trading platform and gets you into the penny to the pip to the tick. It's a very, very precise indicator. It's like my little scalpel for trading. So indicatorwebinar.com. Give you an hour of my time and give you the indicator. Okay, so today's topic, however, is about stock market day trading. And more specifically, it's about which markets are really the best for day trading. So I'm going to give you three different market options, and I do have a very strong opinion on this, so I'll share with you my opinion, and then you make up your own mind, obviously, which you're going to do anyway. Hey, how you doing? Okay, so number one is stocks. We got the title Stock Market Day Trading, so it only makes sense to start there. This is what a lot of people do. Nothing wrong with it. Perfectly fine. That's where I started too. Did that for many, 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 many years. And here are some advantages. So one of the big advantages of day trading the stock market is that you get a lot of choices, right? There's a lot of companies out there, a lot of stocks to choose from, thousands and thousands and thousands. And so some people like to do some scans, look for big movers and all that kind of stuff. And that's great, right? That can be used very, very well. One of the biggest disadvantages that a lot of people hate about day trading the stock market now is that, well, here in the US, again, I'm in the US, so just understand certain things that I say will vary from country to country. And I totally understand we have people from various countries on here. So I can only speak from the US. That's what I know. But here in the US, we've got a thing called the pattern day trading rule. And this little gem says that you got to have $25,000 in your account to be a pattern day trader. So now the problem is with that, of course, it's a lot of money. Most people don't have that size of an account to trade with. And then not only that, but you really can't just have $25,000 in your account. You got to have more because you're going to have some ups, you're going to have some downs, some fluctuations in your account. And so if you dip below that $25,000, well, then you got to fund the account again and all that kind of stuff. So you want to give yourself a buffer, right? So you want to have more than that. So anyway, I think that's pretty obvious. Now, one advantage of day trading over swing trading stocks is that you do get leverage, but it's only 4-to-1. But it's better than a kick in the seat of the pants. Now, 4-to-1 leverage is the advantage of it is that with leverage, you can make more money than without leverage. You can make more money faster. And I don't know about you, but I like to make more money faster. Of course, it is a two-edged sword because you can also lose more money faster. So you only really want to do this when you've already proven consistently over a large sample of data that you're making some money, okay? Because we don't want to lose money faster. All right, so that's it. I'll just move on from there. So stocks. Now, the second one is you could day trade Forex. Now, when I say Forex, that literally means the foreign exchange market. When most people think of Forex, they think of spot Forex. So that's not, spot Forex is a subset of the foreign exchange market, but that's what we'll refer to today because that's what most people think of. So with the spot Forex market, you can have a smaller trading account. So that's one of the huge advantages, and that's why it's one of the reasons it's popular. So you can have a smaller trading account. You can, most people, they don't have the $25,000. Now, what's also cool is that you can have a micro or mini lots. And so you could have a really small trading account. And I think this is a pretty darn good idea for a lot of people who are new to trading or just transitioning from a demo or simulator account. And they've proven they're consistently profitable there, which you always should do first. And then they start trading with real money. When you make that transition, you want to keep the psychological impact of trading with real money as minimal as possible. And so starting with a micro or mini account is really good because your losses will be small and that won't have as much of a psychological impact on you. So that's great. Fantastic. One of the biggest advantages of spot Forex trading. Another one is that you get much bigger leverage. Now, here in the US, I believe they've maxed it out. They've actually reduced it in the last couple of years to 50-to-1 leverage, which is a lot of leverage, right? That's huge leverage. So in some countries, it's 200-to-1 or maybe even more. It used to be that way here in the US too. But the fact that the US regulators reduced it from 200-to-1 to 50-to-1 take that as a lesson. Why did they do that? They did that because, again, it's a double-edged sword. So people would lose so much money so fast that the regulator stepped in and said, well, we got to put the brakes on this, right? This is not good for people. Now, again, not all countries have done that, but it teaches us a lesson that we tend to get overly optimistic and we only think about the winning, so the advantage of the leverage. But you really need to consider the downside of the leverage as well, because the fact is most people lose money trading. So yeah, that's a very, very serious consideration. All right. So, and by the way, just because this is really important, just because they will allow you to have that kind of leverage doesn't mean you have to take it. Does not mean you have to take it, right? You can tell your broker, okay, I only want this much leverage. Now, another great advantage of day trading the spot Forex market is you can trade around the clock, whereas with most stocks, you really can't. Now, we do have pre and post market trading in the stock market for certain stocks, but there's not as much liquidity. So with the spot Forex, one of the really cool things is, let's say you've got a day job like most people do when they first start trading, but they want to do day trading specifically instead of swing trading. Well, you can find a currency that is trading on the other side of the planet, and it's actively trading on the other side of the planet. And then you can trade that when you're off work. So yeah, big advantage, really cool. And they're good markets. You know, I like to trade the most active pairs, as usual with anything. I like to trade markets that have a lot of market participation, a lot of volume. Okay, and then the third and final market that we'll talk about for day trading today is really my favorite, and that's the futures market. So it doesn't necessarily mean it's the best, it's just my favorite, and I'll tell you why. It's got the great combination of both the advantages of stocks and of Forex, but with an extra kicker. And that kicker is what really makes it my favorite. So first of all, you can have a smaller account. So it has the advantage of the Forex over stocks because you can have a much smaller trading account. And again, that makes it more accessible to most people. Now, the thing is, the futures markets just introduced not only minis, which we've had before, but now micro contracts. And this is very new as I'm recording this, and I think it's a great contract. So S&P micros, very popular, a lot of volume, and again, you risk very, very little money. So you're going to make less, but that's okay. When you're first starting to trade with real money, again, do not focus on making big money. That is a one-way ticket to trader's hell. It really is. Focus on risk, on losing as little as possible, because when you move from demo account or simulator trading to real money, there's going to be that psychological impact of, oh, this is my real money now. And don't be surprised if your trading results start to get a little worse. That's actually normal. All right, and that's just getting your mind used to, okay, getting comfortable with trading real money, and that's going to be easier if you're risking less. This is the reality of trading. Do not get overly optimistic. Okay, the other thing that's great about futures is you get more leverage. So you got more leverage than stocks. You get less leverage than the spot Forex, though. You know, each market has its own leverage points, but let's say around 20-1 average. So still great leverage, really good. I don't think anybody needs more than 21 to leverage. That's my opinion. It's still plenty of leverage to make you money fast. It's also plenty of money that make you lose money fast if you mess up. So you still got to be very careful. Now, there are fewer markets than in the stock market, for example. And also, again, you got to look at so if you go to the exchange, for example, and the futures exchanges, and you look at all the different contracts available, it looks like there's quite a few, and there are quite a few, but not many of them are super liquid that I would consider day trading them. So I only personally right now, at least, there's more than you could trade if you want to. I trade 6. And I trade 6 uncorrelated markets. And this is another thing I like about the futures markets is that you can find these uncorrelated markets. So and just to tell you, I get this question asked a lot. So I'll trade the S&P 500. I trade crude oil. I trade gold, the euro, the yen, and the 10-year note. So those are the 6 that I'm looking at all times. I've got 4 monitors here, 2 really big ones and 2 average-sized ones. And I just have all 6 of those markets up concurrently at all times, all day long, or well, all the time that I'm trading. Usually only day trade like 2-3 hours a day. So I'm watching these, and hey, sometimes you'll see the S&P's not doing anything that whole day, could just be going sideways. But maybe crude's going crazy, or maybe oil, or maybe the euro, the yen, or the bonds. So that's why I'm looking at these 6 uncorrelated markets. Now, granted, they will couple and uncouple, but still, as a daily strategy, pretty good. Usually get really good trades every single day, most every single day. So that's all I need. I don't need thousands of stocks to be scanning through. And by the way, the scanning, day trading with scanning can be a little tricky because by the time the scan comes up and triggers, there's already historical data that's there, and then you're getting in, and it's kind of hard to time your entries at the optimal time. So you could do it for setups, potential setups, like big gaps or big moves or whatever, and then watch it for the time you want to get in. Okay, so by the way, you get it. Here's the big kicker. Here's the big kicker. So the advantage of futures over Forex in the stock market is that you get a favorable, or you can, I got to be very careful about the way that I say this, you can get a favorable tax rate. Again, this only is going to help you if you're making money, but if you are making money, this is huge. Huge, I tell you, huge. It really is, seriously. So, man, I'll tell you, taxes, they just take up such a big part. When you really start making money, you've got to strategize on how to minimize your taxes. Otherwise, taxes will be like your #1 bill. So you get a favorable rule. Futures are in a larger category called 1256 contracts. Now, these 1256 contracts give you a 60-40 split. So 60% will be taxed at the shorter term returns, and 40% as longer term returns. Now, I got to be very careful with this because I am not a tax professional. I don't know anything about taxes. I got to do a big disclaimer here. Don't listen to anything that I say about tax advice. This will vary from country to city to block. It's like crazy. I moved to Los Angeles, and they said, like, welcome to Los Angeles. By the way, you didn't pay your taxes last year. I'm like, what? I pay my taxes? Oh, no, you didn't pay your taxes to the city of Los Angeles. And I didn't have that when I lived in Malibu. So I'm like, oh, well, thank you for the welcome. Anyway, it's complicated, right? You call the IRS 3 times, you're going to get 4 different answers. And even then, you're not sure if you got one of them right. So talk to a tax professional. Also, by the way, this stuff changes all the time, right? As of the moment I'm telling you on this is to the best of my knowledge. If you Google it, be very careful, because if you come up with a Google answer that is a year old, it could be outdated. That's how fast these tax laws change. And by the way, the government has been trying to do away with these 1256 contracts, and so far, at least to the best of my knowledge, they have not. So yeah, definitely don't take my advice as gospel truth. Talk to a tax professional before you make any decisions about that. But that is we'll just say a potential huge advantage. By the way, the difference between short-term gains and long-term gains is ginormous. Make a big difference at the end of your year. Okay, so that's it, my friends. Hey, if you have any more questions about this specifically, let me know. If you have any opinions, feel free to put those in as well. If you disagree, put that in. Yeah, whatever you do, though, make sure you do go to indicatorwebinar.com so I can give you my free market timing indicator. And by the way, I will be there live. So I'm going to spend an hour of my time with you. You can ask me questions there too, but I love it when people, put things on the post. I do come back and check these posts pretty much every day and respond. I think if you look at past posts, you'll see that I respond to everybody. And I love the interaction and love the communication. So, oh, wait a minute. We've got a question right now. I may imagine that. Trey. Hi, Trey. You know what? Before I answer Trey's question, I just remembered. I put in here, nope, I can't see how to do it now. I put in some quizzes, but I don't see how to do it now. Okay, well, anyway, I will answer Trey's question. Hi, Trey. Do you leave overnight data on, or do you trade the intraday gaps? Oh, that's a good question, actually. Yeah. You can do it either way. Don't you love that? It depends. That's one of my least favorite phrases in the world. It depends. and yet here, that's what I'm saying. But it really does. So I just, you can trade intraday gaps, and there are trades that are based around intraday gaps. So if you like to trade those, then obviously you do not want to have your overnight data on. On the other hand, so I guess my answer is it depends on your style of trading. Gaps are significant. They are meaningful, and it's good to see them. So I'll tell you what I do. Well, now, let me tell you the other side first, then I'll tell you what I do. So the advantage is the gaps are meaningful signals in technical analysis, and they're very, very helpful to see, and you can also develop trade strategies around them. So that's the good side. The downside is if you use like wave counting of some sort, then it can kind of mess that up. It can also mess up if you use indicators on your chart, then those gaps will just mess up the indicator mathematical formula, right? It'll just make it go wacky. So, and then the indicator, it will take a little time to recalculate and give you meaningful signals because the gap will just throw it off. And therefore your indicators won't be very helpful early in the morning. So those are the pluses and the minuses. Here's what I do. I use both. So I'll have a chart that has tick data. So intraday, I like to watch a market that has tick data, tick bars, if you will, and that runs 24/7. Right, 24/7. Oh no, not 24/7, 24/5. I don't put Sundays on there because that messes with my floor trader pivots. So 24/5, Monday through Friday. And then I'll have another chart that is a time bar chart. So I like 2-minute bars, whatever interval you like. And that one I will not put pre and post market data on so that I can see the gaps. And then I look at both of them and I take that information and put it all together. So that's what I do. Great question, though. Intelligent question. Yeah, you're a smart guy there, Trey. So good. Hopefully that was helpful. Okay, everybody. Well, very good. Later on, I'm doing this live right now, but most people see it later. So if you have any questions like that, type them in. Any comments, any requests for future videos, by the way, also, if people have requests for future topics, we'd be happy to address those. I'm always looking for topics, and the best topics are the ones that you request, that you want. So you're welcome, Trey. My pleasure, my friend. All right, everyone. Well, have a great rest of the day, and happy trades.